Welcome to this Coalition Greenwich presentation on delivering on ESG. My name is Sophie Emler and I'm a Senior Relationship Manager in our European practice. Today's presentation is as a result of the participation of institutional investors in our research programs, which we thank you for, and for your membership of the Greenwich Exchange, through which you can benefit from our latest data-driven insights, study releases and market intelligence. If you're not currently a member, please do reach out regarding our 2023 institutional investor research. Delivering on ESG was our fifth market study with institutional investors examining their preferences, perspectives, and future plans for employing ESG. We interviewed 305 key decision makers at large institutional investors across North America, Europe, and Asia. Now, as we can see at this point, globally, use of ESG in a portfolio is sitting at around currently 75%. But we can see there's fairly significant disparity when we look at the different regions. So in North America, we're looking at 53% employing in ESG within their portfolios, which is heavily driven by Canadian investors. In Europe, conversely, this is now at 92%. So use of ESG is nearly ubiquitous in the institutional investor community within Europe. And then for Asia, that's sitting at around 76%, so in between. And this is a pattern that we'll see throughout the data set as we go through this, the Europe sort of leading the way when it comes to ESG, Asia sort of in the middle, and then North America, I suppose, bringing up the tail. So when we ask what would be institutional investors consider to be the main objective in using ESG, what was interesting is significantly it came out as positively impacting society and the environment comes out as the main objective. Now, 2-3 years ago, when we spoke to investors, reducing risk was number one. And while it's still very important, really interesting to see this falling back, and particularly as we see in Asian investors, positively impacting environment, nearly 3/4 saying that is the first, second, or third most important objective. Then we look at what are the three constituent parts of ESG: environmental, social, and governance. And again, we see some slight disparities between the different regions in their level of importance. But broadly, in Europe and Asia, we see that environmental is number one currently. And then in the next 24 months, across all the three, we see a growth in usage. But significantly, we see a greater focus now and in the future for Asia on governance. And as we'll see going through some of the other slides, that there's a greater weight on social for North American investors. When we then dive into some of the different pillars, so when we look at environmental, what are the key themes sitting under the pillar of environmental? And number one that comes out is climate change, closely followed by carbon emissions. And as we can see, that's a very heavy focus for European investors. Still a focus for North America and Asia, but I think the selection is very much driven by European investors, where it's been a real topic of conversation in the political sphere as well as the financial sphere. When we look at social pillar, here diversity inclusion comes out number one, and this is very much driven by a focus in North America. Last year, there was probably a stronger focus from Europe and Asia on diversity inclusion, and this has fallen back, I think, in favour of a focus on environmental factors, but still remains a key driver of ESG use in North America. When we look at the governance pillar, which is the most prominent among Asian investors, we see bribery, anti-bribery practices, business ethics, anti-corruption, anti-competitive practices coming out as the number one. And this has been a focus for Asian investors for the last 5 years, more so than any other area, and continues to be and will continue to be in the future. And this is partly, I think, because unlike the European Union, where you have a set of standards across all jurisdictions, across all countries, in Europe, in Asia, you have a much more fragmented picture. So there is less of a prevalence of standardized business practices, but that is then a key challenge for investors. But so at what point are investors even thinking about ESG when they're making a manager selection decision? Well, really important to note that particularly in Europe and Asia, it is right at the very start of the process. So nearly half of investors saying it's as an initial screen, the very, very first point when they're thinking about a manager. And if not at the initial screen, then potentially during the preliminary due diligence. In North America, this is pushed back a little further in the process, so perhaps later on in the decision-making process. But that's not to say that it isn't, 20% are still saying at the initial screen. So it's very early that the conversation needs to refer to ESG if you're having it with investors. How effective is the communication of managers, though, when they are talking about ESG? Now, interestingly, we do a lot of surveys that where we look at this 5-point scale of excellence, and very unusual to see such a small grouping of scores in the excellent bracket. So globally, investors saying that only 6% of managers really are truly excellent at communicating and evidencing ESG. Crucial there is evidencing as well. Around a quarter are very good, and then a large proportion in this good bracket, but it still shows that in all of those different countries, in all of those different geographies, there is still a very long way to go for managers to show real excellence and to stand apart from the crowd in how they communicate and how they evidence ESG. And I think this will be a focus for the years to come in terms of managers differentiating themselves, but also when we look at evidence, what data are they providing, what case studies are being provided, what evidence of stewardship is being provided, and that's a real focus for investors. But currently, as we can see, nobody really standing out in how they do it. Who do then institutional investors go to for this information? And interestingly, while ESG specialists are really important, it's the portfolio managers who are the #1 source of this information. So 43% saying that the portfolio manager is really the most important source of ESG communication, and that is up to 80% rating it as highly important when you look at European investors. So key when having those managers having those conversations with investors really need to think about who they're putting in the room. But as we can see, there's still expectations that people from across the firm, so senior management, product specialists, relationship managers, all need to have still a decent understanding and can communicate the firm's position on ESG. So it needs to be a firm-wide endeavour, but that portfolio managers are going to play the key role in those discussions. Turning to net zero, which has become a topic that has gained importance probably in the last 3 years. We see that already 15% globally of institutional investors already have a net zero target. Now, this is much stronger in Europe. Nearly a quarter already have a target, with more than another quarter planning to implement one imminently. Unsurprisingly, and following the trend that we've seen with ESG uptake, in North America, there's only 5% of institutional investors have a net zero target, and 20% nearly saying that they're due to implement one. But when we've done research like this in the past, where people say we're not planning to implement one and do not have one, that still is, I wouldn't say a stake in the ground of saying that's a number that is unlikely to change. It's usually then will be driven by the rest of the market, by customer demand, or indeed by regulatory demand. So while we're seeing 60% saying they do not plan to implement one, that is likely to shift. And why is it likely to shift? Well, mostly because those investors are still trying to understand what does applying net zero really mean. So 60% of investors globally saying the reason they haven't adopted net zero is they still need to learn more about it. Still a significant proportion saying that they feel investment managers should be focusing on ESG objectives rather than unilateral targets such as net zero. And interestingly, nearly 60% in North America saying net zero is not an important topic for our investment strategy. But I think, again, this falls along potentially more political narrative than it does a financial or investment narrative for North America. But so what changes are we going to see in the next few years? Globally, almost 70% plan to increase in ESG integration and allocation. So this trend of increased use is not going away. And even across all geographies, we're going to see an increased uptake in ESG. And so where is that increase going to happen? Traditionally in the past, I think ESG has been more aligned with equities. It's been easier to prove to provide data to prove ESG integration, to prove its impact on an allocation, but seeing uptake across all different asset classes, and significantly 35% saying that there needs greater alignment in private markets, which we also see as a particular area of focus for institutional investors generally as an asset class. So interesting to see this alignment coming about very quickly between a growing asset class in general and its alignment with ESG. And so in the next 5 years, how much of portfolios are likely to undergo changes due to ESG? Well, a significant proportion. We're seeing more than 50% of investors globally are likely to change more than 10% of their portfolio in order to meet ESG considerations. Again, heavily driven by investors in Europe and Asia, and less so in North America, which is, as we've seen, a trend throughout, but still a high level of turnover likely to happen across portfolios in the coming years. So, as we said, a trend that is here to stay, and likely the focus will now be on, as we said, measuring impact, showing stewardship principles, and then, as we've likely see, probably increasing focus on issues surrounding regulation of this area. Thank you very much for listening.